everyone. Thank you for tuning in. Let's start today's topics. Ford Motor is recalling 18 F-150 Lightning electric pickup trucks due to an internal battery short over a 4-week period starting late last year at battery supplier SK On-Cell factory in Georgia. Ford reported that none of the trucks that have been delivered to customers were affected, and the assembly lines at Dearborn were down for 5 weeks while they investigated the incident. Ford is aiming to ramp up production of the electric truck to an annual rate of 150,000 vehicles later this year. Talk about lightning fast recalls. Ford Motor Company announced on Friday that it was resuming production of F-150 Lightning vehicles after recalling 18 electric trucks due to a battery cell manufacturing defect. The recall is from a 4-week production period starting at the end of last year, with Ford replacing the battery packs in all 18 affected vehicles. Ford also mentioned that they have not yet set a date for resuming deliveries but said production is on track to resume Monday. Looks like Ford Motor Company is ready to light up the world with its F-150 Lightning. Meta Platforms, or Meta, is reportedly considering divesting its business software company Kustomer that it bought last year. According to a spokesman, Ryan Moore, "We are currently exploring strategic alternatives for Kustomer and will continue to support Kustomer's product and customer base throughout this process." Meta plans to look at all options going forward with Kustomer, not to be confused with customers who want their money back from Meta. Meta Platforms, the parent company of Facebook, is planning additional layoffs that could match, or even exceed, the magnitude of the 13% workforce cut it had done last year. It said that the cuts will be announced in multiple rounds over the coming months and that it is likely to hit non-engineering roles especially hard. To support the layoffs, Meta has been contracting resources and shifting teams, as well as closing some projects and teams. It was also previously announced that the company was shutting down its new product experimentation group. Pay cuts, layoffs, and shutdowns. Just another great year at Meta. Facebook recently took to their blog to lay out the changes they are making to the way people use their site. Changes such as providing tools to make it easier for everyone to become content generators and showcasing third-party content have caused the site to look more like a short video feature that competes with TikTok. In addition, the social media giant has reached 2 billion daily active users for the first time in December, which highlights the potential for more advertising dollars and higher levels of engagement. While these changes may lead to bigger opportunities, it doesn't look like we'll be seeing as many pictures of puppies in the near future. Silicon Valley Bank, SVB, a trusted lender and deposit partner to some of tech's biggest startups and moonshots, was shuttered by California banking regulators on Friday. Tech CEOs scrambled to make payroll. Startups with money held at Silicon Valley Bank raced to come up with plans to pay their workers, and VCs and investors discussed solutions to help the squeezed companies. It appears Silicon Valley Bank's depositors were the only ones who saw this coming, though they didn't have the keys to unlock their cash fast enough. As foreign-owned auto assembly plants continue to face growing unionization efforts, Nissan will hold a secret ballot for about 86 tool and die technicians at the automaker's Smyrna, Tennessee plant to test the waters. With the outcome of this small push being closely watched by unions, this event could set the tone for a wave of unionization for the auto industry. Looks like big labor is revving up those union engine, hope they don't crash and burn. Lightshed analysts downgraded Apple stock to sell from neutral on March 10, 2023 due to a more conservative outlook for iPhone sales and moderating growth expectations for services revenue. Analysts set a share price target of $120, 20% below its current price, pointing to flat to lower phone subsidies, the increased use of eSIM, and potential economic weakness that could rein in consumer spending. Apple's first fiscal quarter earnings reported its steepest sales decline in more than 6 years, with iPhone revenue falling to $65.8 billion from $71.6 billion a year before. Even the infallible Apple, held in high regard by stock analysts, is not immune to the bearish conditions of the market. This is everything for now on the Wall Street wackiness. See you in another time.